Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Last week we were dealing with really a lot of downward attitudes, but now we're into day 4 of the Goldman Roll as we record this on a Wednesday. Many folks kind of scratching their head, wondering about what happened in yesterday's trade, that Tuesday trade, as we moved into the midweek. We'll talk about issues happening in the South, export data, some big kills, and let's talk about how rain is a saving grace, and a little bit of talking of chopping wood as well. We're going to get all those details this week with Brad Kooima. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So we got to kind of start out. It's day 4 of the Goldman Roll. Kind of where are we at when it comes to these numbers for cattle?
Well, I think it's a decent question. Susan, thanks for having me on. Of course, I get a kick out of doing this. The Goldman Roll is, everybody talks about the Goldman Roll because it's clearly defined. It starts the 5th business day of the month prior, and then it'll last for 5 days. You'd think by now we'd all understand that, and I think most of us do, and prepare for it. The big trader prepares for it. So what has been particularly interesting, at least to nerds like me about this sort of thing, is that we've taken a lot of open interest out of the June cattle. So the Goldman Roll, if you don't know, that's when they sell the front month and buy the next month. They just move their long position forward. So in other words, they're selling June and buying August. Well, sort of. If you look at the open interest here, what's been happening during last week, the pre-roll, is most of it has been liquidation of the June, with very little of it getting moved to the August, which is a little disappointing. You need the funds, whether you like them or not. We need a long speculator, and they're one of the very few that we have left anymore. So yesterday, okay, I'm an old guy, right? The old days, the 3rd day of the Goldman Roll, that would be a day where you expect, okay, the worst is probably over. Now we're going to see the front months start to gain on the back months. And then yesterday we had that giant up day. And there wasn't a lot of roll that got done on the roll because of that. So the one thing I think, though, that is interesting to me, if I could, with that huge liquidation that we've had in the June cattle, like 32,000 contracts in the last 6 days, June has not done too badly. I mean, really. I mean, today was a down day, but I mean, the 4 days prior to that, we've seen the market gradually gain against everything else, and Jane generally. So, it's not all gloom and doom. I mean, we had a little bit of a lower day today, but I think the market's handled itself pretty well.
So how much of the South and their early leaking, shall we say, of cattle prices is going to have an effect on this trade this week?
Unfortunately, the futures market will trade to the lowest denominator. In other words, it'll trade to the worst of the news or the lowest of the cash, which again is the South. Brad pondering how not to make this a disparaging comment. Okay, so they're basis traders, they claim. They say they're all hedged, they claim, right? They're all formula guys is what they are, and they don't negotiate anyway. But anyway, the handful of cattle that the packer does negotiate, which, by the way, does set the standard for where the formulas are based on, it seems like they're very willing sellers because of a weak basis like this. So it is what it is. I thought, now, if we had done this yesterday, you could have, all your listeners would all say, yeah, look at that. Look how wrong Brad is. Because yesterday and even this morning, well, in the North, we're getting steady bids. I passed 175 for calves. That's what I could have got last week. Okay. There was some 177 traded on old crop cattle. That's fully steady. So I was kind of starting to get, well, hey, maybe instead of being 2 to 3 lower every week like we have for the last 3 weeks, maybe we're going to finally, show a little resolve, put a little bow in our neck and say, you know what? We don't have to trade cattle here because we're current enough. Unfortunately, I think what happened during the session today, when there was some rumors that there was some 170 traded in the South. And of course, I'm on the horn trying to, is that for real? Yeah, no, we're just getting bid. We're passing it so far. But I think, as now with this poor close, I guess I wouldn't be surprised this afternoon we'll hear confirmation that there was some 170 trade. But I don't know. 170 is still 170, and June cattle are still $7 lower than that.
We do have some exciting news to talk about, though, and that has to do with some exports of our beef.
I think every time I do a program like this, I get asked somehow, directly or indirectly, well, but what about demand, Brad? How, are we going to price ourselves out of the market? Yada yada. And to your specific question, I see no sign of that yet. Now, will we, will anyone? No, we'll probably see it after it's past this, where all of a sudden we see this backup start. But so based on the 2 week ago data, which is the most current we get relative to that, 10.9% of our production, beef production for that week went for export. That's a big number. Most of us cut our teeth on 5%. I mean, that we're trading a lot of export beef. Okay. The domestic demand, the last little while here, and I don't think it's a coincidence, the last week or two, I see some of these middle meat cuts, the ribeyes, the strips, the high end stuff. They've come up a long ways in some retail spots. Now, some of that is because of the calendar. It happens every year, whether you've got an oversupply or an undersupply. I mean, they price it because they know they can sell it that way. Mm-hmm. And Mother's Day, we've talked about all this, how the demand is perfect coming in this next time. So I see no pushback, whether it's the export thing seems to be alive and well. And I think you got a growing international economy. You got China, for instance, they got a growing middle class. They're finding out there's more to live in than China and pork or than rice and pork. So at this point, that side of it doesn't demand me, or that side of the demand thing doesn't bother me. I'm more bothered about if there's indications of, like, say that there would be a major recession or something coming, which that's above my head too.
Yeah, mine as well. Let's talk about the fact that rain has kind of been the saving grace for many folks. We look at the panhandle of Nebraska, some areas of Kansas, getting some much needed rain, which is going to green up some pastures.
I have a high level of empathy for these people that are losing what, can be, for many of them are multi-generational, where they've built this herd forever and have drought steal it. And so, yes, I hope that this has come in the nick of time for some of these people. And, as specifically as an analyst, what does this mean? Well, then it always speaks to the macro that you and I have talked about for months. And that is, are we going to get enough moisture that we start the heifer retention? Okay, that we stop the cow liquidation, and even more importantly, last year's slaughter was by 7% a record, more heifers of the percentage of heifers fed as compared to steers. We fed more heifers than we had ever fed. Okay, so if you finally turn that, okay, you got enough moisture where not only do we slow down our cow kill, that we also decide to retain 20 or 25% of those heifers to rebuild our herd back to where they were. That's where that noose gets tight. That's the 2014, big bull market type scenario. I think it's coming. I think it's a little different this year because of, the North got a lot of moisture. You talk about the Dakotas, Montana, Colorado, most of Wyoming, most of that area has got quite a bit of moisture, and I'm pretty confident they're going to go back into the restocking thing. You had this soft spot in Nebraska, Kansas, and into Oklahoma particularly, but some rain, I don't know. One robin doesn't make it spring, and I think they're going to tell you that they need more than one rain, of course. But sometimes when it starts, it changes the trend of things, right? I hope so for their sake.
All right. Finally, as we wrap up, let's talk about this chopping wood, and we're going to have to do so for just a few more weeks.
You got a market that every morning there's bullish news and there's every morning there's bearish news. Guess what? So you're sitting here with a market that's trading at a steep discount. Normally we are. Okay. Typically we have a wide basis this time of year. In other words, cash is much above futures, but this one is borderline on the record book. Okay. So the market may have to just kind of the guys that are bearish, okay, we get you. Cash market is still pretty good. So if you want to stay short futures at, $10 or $12 below cash, go right ahead. On the other side of the coin, you got it's maybe a little bit hard for the bulls to pitch their story as well. With going to slowly go into increasing supply, you're going to leave this good demand period, yada yada. So I'm not sure that we don't have to. My vernacular of chopping wood means I wonder if we don't bounce back and forth here within a narrow range, and then I think you're going to find out what they found out 2 months ago, and that is that the supply of cattle in the North is not as big as everybody thinks. And then I think, we'll catch someplace, and after making a kind of a normal early summer low, then we'll see what the market will bear in terms of going higher into the fourth quarter.
All right. Sounds good. We'll catch up with you next week, see what the markets do between now and then.
Sounds good.
Joining us, of course, has been Brad Kooima. As we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's this week's Cattle Call. on the Rural Radio Network.